talk about the economy now and interest rates, housing, and how it's all impacting right across the country. Craig Stobo is the chairman of New Zealand Wind Farms and our business commentator. Craig, g'day, nice to have you on.
Good afternoon. Nice to talk to you again, Duncan. And thoughts with the Hewitt family. So appreciate you standing in.
Yeah, no, he's one of the good guys, Norm. Had a bit to do with him in Wellington. Really good guy. Really amazing. Every now and then someone comes along and they're a bit rough trade, early on, but they make good of themselves and they take all those things that they learn some lessons from and they impart, all this education and goodness on others. And he's one of those guys, mate. Really was amazing.
Yeah, and clearly Michael Laws and Norm had a amazing conference to talk about lots of things together. So I'm sure it'll be a tough day for Michael too. So thoughts with him as well.
With the economy, it's. I was speaking to a recruiter, quite a high-profile recruiter this morning, who's been around the New Zealand market for 20 odd years, and he said he's never seen anything like the state of the New Zealand economy right now, with the revenues the way they are and businesses just holding on and people on the sidelines waiting for things to happen again, and just a real lack of confidence in the New Zealand market and the New Zealand story and the New Zealand future. And I look at interest rates. Even the banks have started to move now, bringing them backwards. They have the room to move to be honest. But we're still waiting for the Reserve Bank to do something and to say something, and their time will come. But it's interesting, isn't it, when the banks don't wait for the OCR. They know it's on the way down. They know the inflation's largely now under control, and so they've gone. It's interesting what the banks have done. What do you think?
Yeah, so markets always look forward. They're always anticipating the future. So as your listeners will know, the RBNZ's held the cash rate unchanged at 5.5%, but the tone of their statement to the marketplace became a lot more favourable. And inflation has dropped from 4% to 3.3%. And so the market has moved quite quickly, actually, across the term structure of interest rates. So, government bond yields have fallen, swap rates, which is the market between banks, where banks exchange fixed and floating cash flows between each other, the interbank market. That's dropped quite a lot, particularly in the short end, where 1 year swap rates have fallen from 5.5 to 4.85, and they're important because they're a benchmark for bank mortgage rates, which have also fallen, as you said, across the curve from 1 year out to 5 year. And the currency's fallen as well over the past month, from around 61.5 US to just under 60 cents, about 59.5. So, yes, markets are looking forward and moving, and the bank isn't going to move without confidence around the track of inflation, because non-tradables inflation, that services like rates and insurance, are still travelling at quite high rates of increase, and that underlying non-tradables rate is still sitting above 5%. In fact, it's closer to 6%. And the mid-rate of the bank's target is 2% headline inflation, and we're sitting at 3.3%. So they'll want to sit inside that band. There's a couple of things that worry them, I think. Long-term inflation expectations are still not coming down yet. And the rate at which the economy can grow without inflation is lower, because our productivity story is so poor. So what does that mean for homeowners who've got mortgages? Yes, rates have come down, but they may not come down as quickly as people would like. So you're right, there is a weak economic growth, continues. Looking at the credit card spending, we've just had another month after 4 previous months of declines in credit card spending. Residential building consents, they've fallen from a high of 6,000 consents in September 21 to only 3,400 in the March quarter. Immigration is helping, I think, support some activity locally, and certainly the Reserve Bank's moved some ratios, some lending ratios. You've got the Bright Line test coming in now at a lower year number rather than 10 down to 2 years, and you've got some interest rate deductibility now for landlords, where they can deduct interest for tax purposes when they borrow against housing. What does that all mean for house prices? Well, the QV house price index across all New Zealand is still falling. It was at a high of $1.06 million for the average New Zealand house in June 2022. In June 2024, it was 916,000. So despite some falls and straits, despite the immigration, confidence is still not strong and house prices remain weak. So I'm afraid that will mean some more pain for a little bit longer, I think, is the message overall, Duncan.
Yeah, I think he wants to take this through till Christmas to make sure that inflation is dead and buried, because it's an ugly, ugly head when it pops up, isn't it? And I know you've talked about it being a thief in the night or whatever, and it truly is. New Zealanders who have never experienced inflation and the impact of it before, and then many of us haven't really seen high interest rates or seen high inflation. So I have, but a lot of New Zealanders haven't. They would have thought that interest rates would stay low forever and there's no such thing as inflation. This has been such a wake-up call for a huge section of our society, hasn't it?
Yes, that's right. And you're not getting, with your cost of living pressures, which is coming through in all sorts of ways, like the ability to afford purchases from retail stores. People are cutting their budgets back. They're looking to live within their means. There's a well-known law, Duncan Parkinson's law, which is we spend up to the income available. And those of us that have the benefit of higher incomes, if we have spent up to those limits and haven't conserved some savings, when you've got prospects of unemployment coming, you're going to have to cut back on expenditure. And some households will face those pressures where job outlook is less secure, and so they're tightening their belts. And that's why retail sales and the retail sector is toughing it out, is that people just don't have the money that they used to, or thought they had, but they actually didn't.
It's death by 1,000 cuts. If you look at, especially retail, I'm thinking Auckland, which is where I'm based at the moment. The restaurant industry, the cafe, restaurant, hospitality industry, and retail, front-facing shop sort of bricks and mortar retail, is in a woeful state, Craig. I mean, it is really. I don't know how they are holding on. They are clinging on, and I hope that something happens. You've got the tax cuts coming at they're due in 2 weeks.
That's right.
They're due in a week. That's a week away. Yeah.
Yep, and you've got lots of sales on, obviously. People are offering quite good discounts on goods and services to encourage people to come out and spend a little bit. And people are looking very carefully at their stock levels. Some shops are obviously closing, Ponsonby Road or Queen Street. You can see the vacant shops. But on the other hand, there are some restaurants that are opening. So it's not all one way, but it's tough for sure.
I was in Dargaville the other day.
Oh, yes.
Yeah, I was heading towards the Hokianga, and that's with my son for a bit of fishing. And so it was late, it was Saturday afternoon, and I always like to go into the hunting and fishing shop there, and to just grab whatever I don't need, because I'm one of those guys. And so I went in there, and the sale was phenomenal. Like these sort of hunting jackets and things that are usually a few $100, $100. They'd taken almost 50% off. And I don't know how they were doing it, because you couldn't have made these jackets for them. And these are top quality, the sort of jackets I'm talking about. And they hadn't. I was in there for 45 minutes. I was the only one in there for 45 minutes. No one else came in. I was the only guy in town.
Yeah.
How on earth are these fixed? They have all their own fixed costs and everything. How on earth do they stay open?
Well, the kind of business response to try and cover your fixed costs. So you've got your insurance, your rates, your power. You've got to try and cover all those things, and then you've got to cut your variable costs. So can you encourage staff to operate differently within the business, and hope that the margins you get for those stocks that you do sell is enough to cover those fixed and slightly variable costs. But what you don't want to do is increase your commercial loans, do you? Because that's just another finance cost. And some businesses have to reach that decision where they just can't continue and have to close and try and pay the bank back or pay your creditors. So it's tough times, and the businesses that have been conserving their balance sheets, conserving their cash are probably okay. Those that extended themselves with too much debt will be asking some questions around how do they move through the next week, the next 2 weeks.